This is question number 2 for practice homework 9 for module 13. So here we're provided with the income statement and the balance sheet for Cisco systems for 2 years. So we need to calculate a bunch of numbers used in the discounted cash flow model. And then we need to estimate the intrinsic value of the equity and then compare that with the actual trading price and then make some adjustments. So the first part is asking us to calculate NOA. So there we need the balance sheet, right? So the first step for me is to copy this balance sheet to Excel. And you can see that I don't want to do this. I want to change the, actually, I also want to copy the income statement and then make the change once. So, so now I have this, I guess I can just copy this year number here and erase all this. Sometimes you get some unexpected results, so you just need to manually get rid of that. And I just want to check that the numbers are what we expect them to be, especially for the negative number. And then I want to switch the years for 16 and 15. The reason I want to do that is because if you check the if you check this table, you will find out the later years are actually on the right. So I want to follow that. So now the first part. So we know that NOA, if I write down this, add some more rows. So NOA is OA, right? Operating asset minus operating liabilities. So then we just need to differentiate between what are the operating assets and what are the operating liabilities. So operating assets and operating liabilities are both operation related. So on the asset side, operating asset basically starts from accounts receivable here. So I mark this in red, and then inventories are also operation related. And financing receivables, this basically is taking the accounts receivable as a collateral. So this is based on also in operations. And other current assets is also normally operation related. Net PPE, operation related financing receivables, net operation related goodwill, purchased intangible assets, and deferred tax assets, and other assets. So now I can calculate my operating assets basically by adding up these items in red. So because I have some consecutive items, I can use the sum function, and then I add another sum function, right? It's a shortcut to do it rather than adding the individual numbers. So just want to double check. Yes, that's exactly what we have. So then let's go to the operating liabilities. And this starts from accounts payable and income taxes payable and accrued compensation and deferred revenue and other current liabilities. And Then income taxes payable. Long-term debt is financing related, so it's not operation related. Deferred revenue and other long-term liabilities, right? So for the operating liabilities, we can also use two summations and add them up. One starts from here and end to the other current liabilities, and then we add the sum of these three items here. So, and then NOA is simply the difference between the OA and OL. All right, so that's basically, we can put this number back to the first blank. So the second part is compute net operating profit after tax for 2016. Assuming a federal and state statutory tax rate of 37%, and round your answer to the nearest whole number. So this part requires the income statement, right? So we know that NOPAT is based on, go back to the module 3, NOPAT is based on net operating profit before tax. So it's based on NOPBT. And then we have the tax on operating profit, right? Tax on operating profit. So NOPBT, basically this refers to the operating income. And tax on operating profit is equal to tax expense plus pre-tax net non-operating expense times statutory tax rate. So tax expense is basically provision for income taxes, right? And then this non-operating net pre-tax net non-operating expense basically refers to all the items after the operating income and before the income before provision for income taxes. And then it's taking, because this is adding the pre-tax expense. So this is taking expense as a positive number. And so income should be taken as a negative number. But that's not what is done here. So, and this interest and other income and or loss is basically is the sum of these three numbers starting from interest income. So this is positive, but again, because we should treat expense as positive, right now it's income, so we should take this as a negative number. So that means rather than adding this pre-tax net non-operating expense, we should actually subtract this interest and other income number, and then times the statutory tax rate of 37%. So this gives me but I want to round this to 0 decimal place as required. So then this NOPAT is basically NOPBT minus tax on operating profit. So, and this is, copy this number back. So part C is slightly more complicated. This requires us to do some forecasting. So we have done actually a calculation for the current year. So let me start from here. This is 2016. And so the next year is 2016 plus 1. So now I can pull the cell to the right. And oh, I don't want to put the number. I just put the cell number here. That's why when I put the cell, it doesn't give me the expected results. So the last year, yeah, horizon period is 2020. So the terminal period starts from 2021. That's what we want here. So then we can copy the number. First, we want sales growth rate. Right, for 2017, it's given by 1%, and for 2018 to 2020, it's 2%, right? 2%, 2%. And terminal period, it's 1% again. And then we also need the information about NOPM and NOAT. So NOPM is not net operating profit margin. So this is given to be 21.5%, right? And then this NOA, net operating asset turnover, this is given to be 1.86, right? So why do I need this? Because NOPM is basically the NOPAT divided by sales. So once I can figure out sales, then I can use these numbers to figure out the corresponding NOPAT. So then what is the sales? Sales, we for the 2016, that's provided by the financial statement. It's total revenue here. So just copy the number here. And then the first year number is based on the sales, current sales times 1 plus the growth rate, right? But if you look at the table, we saw actually 2 rows for sales. One row is round to 2 decimal places, and the second one is round to the nearest whole number. So we also need 2 rows here. This is round to whole number. So that means here the sale is round to 2 decimal places. Okay, so and this is actually automatically kept as 2 decimal places, so I don't have to worry about that. So then the sales for round to the whole number, it's gonna be calculated in the same way as rounded to the 2 decimal place. The only difference is that I want to use the round function, but I want to keep the 0 decimal place. So then I can pull all the cell to the right. So NOPAT, now I can figure out this based on, as I said, NOPM and the forecasted sales level, right? For 2017, that's going to be the forecasted sales times the NOPM. But I want to fix this because later on when I pull the sales, I don't have to change this manually. But at the same time, I also want to use the round function to keep this to 0 decimal place. So now I can pull all the cell to the right until the terminal period. And NOPBT, actually now I don't need this. What I need is NOA, right? NOA, which I calculated earlier. So I can just copy the number, but I want to copy just the value instead of the formula. So I can just copy the value, paste the value. So, and then this is for the first years, it's gonna be sales, right? It's gonna be the sales divided by the NOAT. But again, I want to fix this NOAT cell and then use the round function, round to 0 decimal place, and then pull all the cell to the right. So I guess that's what we have for this table. So the rest of the job is simply to copy the number back. So copy the number back. So I've done copying the numbers back, but actually I have did some minor changes for the first row because here I forgot to round the 2 decimal place as required. So I just added that and copied numbers back. So for part B, estimate the value of a share of Cisco common stock using the discounted cash flow model as of July 30th, 2016, assume a discount rate of 10%, common shares outstanding of 5,029 million, shares and net non-operating obligations NO of 37,113 million. NO is negative, which means that Cisco has net non-operating investments. So be that negative or positive, we should subtract NO from the firm value once we use the discounted cash flow model. So here we need to further use the DCF model, right? DCF model. So you can see that the first part is the increase in NOA because the discounted cash flow model means the firm value is the present value of expected free cash flows to firm. So then the free cash flow depends on NOPAT and the increase in NOA. That's why here we need to calculate the increase in NOA. So we start from the 2017, right? So it's 2017 value minus the 2016 value. So then we can pull all the cell to the right until the terminal period. So now I can calculate FCFF, right, the free cash flow. So this is basically the NOPAT and then minus the increase in NOA and pull all the cell to the right. So, and then going back here, so discount factor. So this is basically the 1 divided 1 plus 10%, right? Because does the 10% come from? It's basically the WACC of 10%. That's the discount rate. But then I want to add a power, even though here actually I don't need the power for this year. But the reason I want to add a power because I want to pull the cell to the right. So the Excel will automatically calculate all the discount factors for me for each year. So the power here should be the year number minus 2016, right? So for this year, 2017 is going to be 1. So that's why I said I don't need this for the current year, but I will need that for the future years. But I also want to round this to 5 decimal place according to the rounding requirement. If you notice here, rounded to 5 decimal places. So then pull all the cell to the right. And the next row here is the present value of the horizon FCFF, PV of horizon FCFF. So this is simply multiplying the FCFF times the discount factor, right? Again, I want to round this to 0 decimal place because if you notice, most of the numbers are asked to be rounded to the nearest whole number except for the last stock price per share, which asks us to round to the 2 decimal places. So then we can put the cell to the right. So then it's gonna be the cumulative of present value of horizon FCFF, right? So this simply summing up these 4 numbers because the last number is basically the terminal value, which actually I don't need to calculate. I also don't need this discount factor. So now I want this present value of terminal cash of FCFF, right? So this is basically the terminal cash flow right here, and then divided by the 10%, the discount factor, discount rate, minus the growth rate of in the terminal period, right? So it's 1%. But this so far is basically the present value in terms of the 2020, right? 1 year before this terminal starting year for the terminal period. So then I need to discount this further back to the true present by how many years? 4 years, right? So I also need to discount this by 4 years. Again, this has to be rounded to 0 decimal place. So so present value of the terminal and the total firm value, right? Total firm value. Basically, this is the sum of this. You just add these two numbers, right? Add these two numbers. So then we need to subtract NNO and subtract NCI, right? Non-controlling interest, right? NNO, that's mentioned to be a negative number, so we just copy that negative number here. It's a negative number. And NCI, we check the balance sheet, right? Balance sheet. NCI is also turns out to be negative number, so -1 NCI. So then equity value, right? Equity value is simply the total firm value minus NNO and then minus the NCI. So shares outstanding, right? That's given by this 5029. So, and then price per share is simply using the equity value and then divide by the shares outstanding. Right, then we need to round this to 2 decimal place. So I guess we are done with this part of the exercise. The rest of the job is simply to copy the number back. Okay. All right, so here I have done copying the numbers back to the table. And you can notice that I have followed the requirement to not use negative signs with any of your answers below. So even though here in calculation, I did use the correct sign for some of the numbers, but when I copy numbers back, I erased negative sign, just use the absolute value of those numbers. So the final part of this question is Cisco stock closed at $31.47 on September the 8th, 2016. The date the Form 10K was filed with the SEC. How does your valuation estimate compare with this closing price? So my valuation estimate is lower than this closing price. So that means this, based on my valuation, the price is kind of overvalued, right? The stock is overvalued. So the first part is our stock price estimate is higher than the Cisco market price, and that's not true, right? It's lower. We should say no. And stock prices are a function of expected NOPAT and NOA as well as the WACC discount rate. This is actually true because if you notice the present value, firm value equals the present value of expected free cash flows. And then free cash flows equals NOPAT minus increase in NOA. So that's why ultimately the stock price will be a function of NOPAT and NOA. And when you calculate the present value, you also need the discount rate. So WACC discount rate will also be very relevant. So this is true. Our stock price estimate is very close to Cisco market price as of September 8th, 2016. So this is true, right? So these two numbers are very close to each other, indicating we believe that the stock is appropriately priced. This is also true. And also, although stock price estimate may be due to more optimistic forecasts or lower discount rate. So these two are not inconsistent with each other because if you have a more optimistic forecast and a lower discount rate, normally your stock price will be higher, right? Estimate because the discount rate has an inverse relationship to the stock price. That's why it's called the discount rate. So this obviously is not true. So then we can check our answer. And you can see that all these answers are marked as correct.